17th meeting of the Finance Committee of the City Commission. Looks like we are down. Commissioner Engel, I believe, is still out of town. So we will have to, just the two of us.
So that means I'm making a lot of motions today.
I think so. Does it? My question was, does it require a second from me, or is it? How does that work, Madam Clerk or Mr. Attorney?
It's
Commissioner Book will make the motions and the second vote.
And I second it.
Or not.
All I can say is I hope we don't have a split vote, or we're going to be kind of stuck today. 1-to-1 deadlock at the commission.
All righty, Madam Clerk, what do we have first?
agenda.
I'm going to go ahead and move that we adopt that agenda.
All right, I'm gonna second the adoption of the agenda. Is there any discussion or discussion from the public?
Nothing.
From the public? All right, all those in favor? Aye. Passes unanimously. All right, Madam Clerk.
Okay, we have the approval of the minutes.
All right,
favor of that too, Mr. Chair.
I hear a motion for September 2nd. I second that.
No comment.
No comments from the public, no further discussion. All right, those
Okay,
in favor?
Mr. Chair, we're moving on to the business discussion items. We have 2025-891 fiscal year ending 2025 city investment performance report. The Finance Committee review and accept the submitted financial year end 2025 city investment performance report and refer to the report to the City Commission.
Thank you. All right. Mr. Johnson, are you?
Commissioners, committee members, I'm William Johnston, the investment officer for the city. And this agenda item provides a report for the fiscal year 25 investments across the city. It includes the city's operating and surplus fund investments, as well as the pension plan investments, the retiree health insurance trust fund investments, and also the Evergreen Cemetery trust fund investments. The attachment A, I'll walk you through that, and if you have any additional questions, we can handle those. At the top of the page, the first section is really for the city operating and surplus funds. This is the cash type assets held by the city, which are restricted in their investments to fixed income type products. The bulk of these assets are invested in the SBA, the State Board of Administration Prime Fund, which is a local government investment pool, basically a governmental money market, and it provides daily liquidity. The rate that is earned on these assets in the Prime Fund is typically the top of the range of the Fed Funds specified rate. So it moves in line with the Fed Funds rate, and this year we've seen that rate, that yield come down several times because the Fed lowered their Fed funds rate through the year. Although for the year the return was about 4.58% overall, at the end of the year the rate is now at around 4%. And there is a chance the Fed will lower again in December. It's not certain, but there's probably a 50-50 chance that they lower in December. And then there are also other rate cuts that are potentially going to occur in fiscal year 26 later on. One thing we expect to see in fiscal year 26 is a shift of assets away from this fund, a large portion of those assets into a bond portfolio. So we'll be purchasing agency bonds and maybe some corporate bonds, locking in longer term rates for a portion of the portfolio that we don't need for cash liquidity on a daily basis. So we'll be executing those purchases and trades as we move forward in fiscal year 26.
And is that mainly because this one, those returns are going down?
Yes.
It's been good for the past couple years.
Right.
Cash.
So I would refer you to attachment B. This is a little bit complicated. This is basically a chart of the yield curves. And there are a number of yield curves included here, which there are some corporate bond yield curves as well as treasury and agency yield curves. Each yield curve just shows you the rate at a point in time that if you purchased a bond, you would get that yield or that coupon on those various maturities. This curve looks a lot more normal than it has for the past couple of years. For a number of years, we had an inverted yield curve where the Fed funds rate was actually much higher than longer-term bond yields. And that's why we had so much money in the Fed, in the SBA Prime Fund. As you see here, the SBA Prime Fund and the Fed funds rate aren't on here, but you can see where 4% is. And so that's about where we are now. We could see the Fed funds rate come down to 3.5% or even 3% in fiscal year 26. That being the case, we're going to lock in some longer term rates to earn higher yields.
Okay, thank you.
Just to go back to the performance chart page, you see where the annualized yield for the Fed funds rate averaged about 4.4% for the year. So the SBA Prime Fund actually did outperform that. Currently, that rate is 4%. There's also another benchmark we use, which is an S&P AAA AA Government Pool Index, and the SBA Prime Fund outperformed that benchmark as well, which it usually does. Even though it's not really an appropriate benchmark for the types of instruments that are held by the SBA Prime Fund, I include the Bloomberg 1 to 3 year Treasury Index as a benchmark as well, just to show you kind of what longer term rates would earn. And the SBA Prime Fund outperformed that benchmark as well, although going forward, we'll expect to see the yield on that benchmark go up, and those will be the types of bonds that we're buying, not treasuries, more like agencies and corporates, because we get a premium coupon for those types of investments. We also have, cash that we hold in, investments that we hold in a bond fund. We had a larger bond fund, but bonds have been called and have matured, so only a little less than $10 million was the market value of that bond fund at the end of the fiscal year. Those bonds will mature over the next couple of years, but again, we'll be shifting assets into that bond portfolio, so you'll see those assets go up during fiscal year 26. We'll come back to you with a mid-year, a March 31st report, and you'll more than likely see a much larger bond portfolio at that time. We also maintain cash balances in some Truist bank accounts, and we throw those that amount in there. It's a little bit less than $3 million as of the end of the year, and it earns a very low rate, not nearly as high as we earn on the SBA Prime Fund, which is why we keep those assets to a minimum, just what's required for payrolls and payables and other expenses like that on a weekly basis. Shifting on to the pension plans, we had a better fiscal year than we expected earlier in the year. At mid-year, most of these, the pension plans had slightly negative returns, but the second half of the year turned out to be pretty good for the markets. There was a lot of volatility. There still is volatility, but the market sort of overcame a correction around mid-year, and the assets performed well. So the general pension was up 9.69% for the year. It did not outperform its benchmark index. That index is made up of a number of standard indexes based on the weightings of the asset allocation of each plan. So they are unique to the plans. If asset targets change in the investment policy statements, those benchmarks change also. A secondary benchmark that isn't really listed here, but which we always have in mind, is the actuarial assumed rate of return for the pension plans, which is 7.75%. If we can earn over 7.75%, then those investment assets, that creates an actuarial gain for the pension plan. That gain can be offset or added to by other factors, including member behavior, salary growth rates, and things like that. So it's not the only factor that goes into the estimate and the calculation of the city's required contribution rate for the plans, but it is a large factor. So all of our pension plans outperformed or achieved a return greater than their assumed rate of return, and we're happy for that. The primary reason for the underperformance compared to the benchmark is that we had a number of managers which underperformed. We have a high equity allocation, which over time benefits the plan, but sometimes we do have volatility within our individual manager performance. And, in the detailed backup, you can see where some managers outperformed significantly the second half of the year. However, a lot of those managers have regained some of that performance, and they've outperformed in the first quarter, or so far the first month or so of fiscal year 26. Police and fire pension plan earned 10.71% on a preliminary basis. And again, they underperformed their index as well by a few percent. The Retiree Health Insurance Trust Fund returned 12.44%, also underperforming its index. The Evergreen Cemetery Fund returned 21.39% and actually outperformed its index. It's a much smaller fund, and it's invested similar to the pension plans, but in more simple mutual fund type investments. And that asset allocation benefited that return. Any questions about specific performance there?
I have a question, a couple comments.
Commissioner?
All right, thank you, Mr. Chair. So, what we're discussing here is probably amongst the most complex of all financial figures. It's how we invest, what we do for our surplus funds, what we do for our pensions to ensure that our retirees across the board, have a financial future in front of them. I think it might be helpful, Mr. Johnson, just for a minute or two, is how do we, just explain the process of how do we even know what to invest? For example, I'm not the one making the deposits. I'm not the one who's saying, let's go into this figure and this, because I don't have that expertise.
Certainly.
You just said, I just think that's important for the record. I know not a lot of people watch probably the Finance Committee. It's not the most exciting. On the other hand, it informs a lot of what we do. So it might be helpful just to kind of give a quick
Sure.
summary of how do we do this that leads to what in this particular case is very good returns thus far for this year
Well,
for the city.
It does vary a bit by the type of investment we're talking about. For the operating funds and surplus funds, those are managed internally. I manage those assets primarily. We discuss those investments with the finance director and the controller, and so we have an internal group that meets to review those. But I've been doing this for 30 years. I've got a finance degree and an MBA. I've worked for Lehman Brothers and Merrill Lynch, so I have a background in investments. And I ended up here at the city, and hopefully have provided some benefit with the investment experience from that perspective. And those investments tend to be more simplified. They can be complicated, but we focused on fixed income, bonds, corporate bonds, agency bonds, things like that. So really, it's just about understanding where the yield curve is. There's some estimation of what's going to happen in the future, but we're more reactive than we are, trying to game the market and hedge things. You can get in trouble doing that. We take the assets that we have and we look at, what makes sense as far as yield curve, where it makes sense to invest them going forward. Or, in some cases with an inverted yield curve, we're investing on the short end with the prime fund just because that's where the yields are and the liquidity as well. With the pension plans, it's different because they include much more complex assets, a lot of equities, stocks, and also for the police and fire pension plan, it includes a larger allocation to real estate, different niches of real estate, as well as alt credit type investments. And for the pension plans and for the retiree health fund, we have external consultants that work with, for the pension plans, we have an advisory committee of local investment advisors who work with staff to make recommendations to the Board of Trustees on investments. We work in step with the consultant to develop the investment policy statement, and then we abide by that statement when we're making the investment decisions. The money itself is managed by external professional asset managers. So we're not actually managing that money. We make the asset allocation decisions about who to give the money to based on their style of investing. There's what's considered box style investing. You have large cap equities, you have growth and value equities, you have small cap equities. So we invest across all those categories. We also have international equities. And you can see that information the way it's laid out in the backup material for the pension plans. Also real estate, fixed income, and in some instances alt credit, which is just a form of less liquid fixed income. For the police and fire pension plan, there is a separate state mandated board that meets quarterly, a couple times quarterly. It includes 2 city appointees, but the city commission itself is not the board of trustees for that plan. That board is the statutory board of trustees for that plan, and they make all the investment decisions there themselves, again, with the help of an external consultant and staff. For the retiree health fund, that's been managed internally with the finance group that meets quarterly to discuss it, and we have an external consultant there and also external managers, but there's not a separate external committee. The city commission is the board of trustees. I believe the ordinance gives the investment decision authority to the city manager, the way it was written back in 2005. So we do take investment decision recommendation to the manager and to the city commission on that plan as well.
All right, so I would boil that down to say that, you don't have city commissioners up here deciding when we should take money and put it in X account, or let's invest in this bond portfolio, because we wouldn't possess, the knowledge, the expertise, the skills, the credentials, for example, that you and our other internal financial experts have. So that's important. People know I just wrote down some of the levels of essentially review that goes through. So you have internal financial experts like yourself, 30 years plus, internal committee. We have a board of trustees for some things where some of the members are state mandated, and we have external professional asset managers. That's what you said. And all of these levels is how we decide what we should do with the monies across these funds, and the way we invest to make sure that we're fiscally sound.
That's correct.
Okay, I just said it a lot quicker than
did.
you said it, but that's basically what you provided, and that's important for people to know. We're not arbitrarily making decisions that affect our long-term financial future at the city because we're up here. We're trying to make policy and operational policy decisions while you all kind of operate on a day-by-day basis to make sure that we're sound. So,
And there are ordinances and state statutes that have to be adhered to as well.
that's a good point. A tremendous amount of oversight legislatively that also determine what we can do and we do it legally and in accordance with those guidelines also. So thank you for that. Thank you for letting me comment on that, Mr. Chair. That's it for me.
All right.
Any other questions?
I guess my only question would just kind of be, since this is a full year, did we learn anything in particular this year, and that underperformance in underperforming some of those, is there anything we kind of learned about either the market or anything about our particular managers or approach?
The managers that underperformed, we've seen underperformance from them over certain short periods of time in the past. Most of the managers for these plans are long-term. We have had them for a long time because the consultants, staff, and the committees, whoever is involved, we have a good understanding of their investment thesis, how they make their investment decisions, and we believe in that. And we've seen long-term outperformance by these managers, so we don't think that their investment process has changed, so we still have faith that they can perform well. We've actually seen them turn around their performance here over the past couple months. So I wouldn't say that we've learned anything particular about the managers, just that they will occasionally underperform for a couple quarters, and we've seen that from time to time. It's been a very volatile year in the markets. You've had a lot of political influence on the markets. You've had tariff situations where tariffs have been enacted, then retracted, and the markets react to that. So if anything, I would say the markets have become more reactive just because of the political environment. And most of our managers, they have a fundamental approach to stock or company valuation. So they base their selection of a stock or a company to invest in on the earnings and returns. They expect to see the growth of earnings out of those companies. What you've seen this year is a lot of companies with no earnings and no growth and no revenue rise to the top. We call it a junk rally. And our managers, because they don't invest in that, they didn't participate. That's why they underperformed. Those rallies occur from time to time. They're very speculative in nature usually, and eventually they fade out, and you'll see fundamental analysis return to the markets, and matter. And we hope that's going to happen in fiscal year '26.
Okay, and then I guess my to kind of to that point, I know there's some general concern across a lot of people about whatever the Magnificent Seven, the big techie stuff that's really driving the overall market. Arguably, at least domestic market is like
Right.
so heavy in that. There's some worries, but it sounds like
Most of our managers, so that you're talking about the large cap growth equity sector there, that's where the Mag 7 resides. Most of our managers, they may have some limited exposure, but because in their valuation estimate, those companies are overvalued, they limit their exposure, which is another reason it's hard for them to sometimes keep up with their indexes. However, the underperformance we saw in the general pension per se was in small cap growth and value. And that was just a matter of stock selection and, again, sort of a junk rally in those small cap names. So, I mean, that's one reason we use external managers, that we don't use passive investment to just buy, an index fund, is because if you do that, you're going to own the entire fund. You're going to own that Mag 7 that based on a cap weighting is 40% of the S&P 500 or whatever index you're looking at. And we prefer not to take that kind of risk. So that's why we have active external managers managing those assets, doing their own valuations and analysis and making decisions based on that.
great. All right. Madam Clerk, do we have any public comment?
No public comment, Mr. Chair.
All right. Do we have anything else? Commissioner Bowe?
Not from me, so. Okay. All right, so,
And then just refer this to the City Commission?
yep, so with that, Mr. Chair, I will say whether we look at benchmarks and underperformance or overperformance across essentially those benchmarks, when you look at all our operating and surplus fund assets and all of our pension plan and trust fund investments, they're all up for this year in spite of tremendous volatility up and down. So I think that that's a good thing. With that, I recommend approval of 2025-891. Finance Committee accept the report and refer to the full commission.
All right, I second that. All right, all those in favor?
I'm still aye.
Aye, all right, that's unanimous.
Okay. And I just want to clarify something, with just two members present, only one motion is needed.
All right,
The
perfect.
chair cannot second it.
I didn't know if I could second or not. Thank you for being
Good
willing.
thing.
Thank you for being willing to make the
Let's
motions.
hope we were doing that with the next few.
All right, Madam Clerk?
Okay, Mr. Chair, we're on to 2025-892 Evergreen Cemetery Trust Fund Investment Policy. The recommendation is the Finance Committee review and approve the Evergreen Cemetery Trust Fund Investment Policy Statement and refer the Evergreen Cemetery Trust Fund Investment Policy Statement to the City Commission for review and approval.
All right, Mr. Johnston.
Hi. So this policy is for the Evergreen Cemetery Trust Fund. The Finance Committee and City Commission have reviewed other investment policy statements over the past year or so. We've been updating these partly due to some statutory changes we wanted to incorporate. This particular investment policy statement has not come before the City Commission before. It was handled internally through a finance review group. The Evergreen Cemetery Trust Fund was established back in '95, I believe, and it was when the city purchased Evergreen Cemetery from a private entity, and the city's been running it since then. At that time, part of the cemetery that came over as under control of the city was a trust fund, and that's what we've been managing since then. And again, like any investments of this type, we will have an investment policy statement. Over the past year or two, the city implemented a citywide policies and procedures update process. And as part of that, we thought that it made sense to bring this investment policy statement to the Finance Committee and the Commission for review and approval, just to adhere to that new policy procedure. Generally speaking, this policy allows investment of the Evergreen Cemetery Trust Fund assets similar to the way the pension plans are invested. So they will hold more complicated long-term investments like equities and things like that. And that's the way it's been managed since its founding back in 1995. So it's always been invested this way. Nothing's really changed. Maybe some asset targets have changed a little bit from time to time, but really it's managed like a small version of the pension plan. There's only about $1.7 million in the trust fund. Because of the size, it can't be managed through external managers. There just aren't enough assets there to have a professional manager take over management. So we invest them through mutual funds, which we still use the same type of style investment that the pension plans use. So we are looking at diversified equity, mutual funds, things of that nature.
So because we don't use an external for this, these guidelines direct you.
Correct.
But previously internally, but this is the first time the commission will have seen them for adoption.
Yeah, I mean, it's possible that they might have been adopted back in the 90s, but not in probably 20 or 25 years, as far as I'm aware. It was just handled internally through the finance department.
All right, and so since this is new, we don't have a bunch of strike-throughs and additions to look at, but this is in essence.
It has been
mirroring-
updated from time to time. There is a 2021 version, which we could provide if you like. But this one did not include strike-throughs, no.
Okay. But this follows all of the statutory updates from the legislature.
Correct. That was included in the ordinance, or excuse me, in the policy statement.
Okay.
Just to hit some highlights, if you like, the reference to the statutes is in section 5D. It refers to the Florida statute section 218.415, which references pecuniary factors. That's an important one, and so we have included that language here. I can also point out the allocation for the fund, asset allocation targets on page 6. It's going to be page 6, attachment A.
Mm-hmm.
U.S. equity asset allocation target is 80%, international equity 15%, for a total of 95%, 5% fixed income. There are ranges around those targets so that we can have up to 100% U.S. equity and up to 30% international equity. We can have up to 30% fixed income or down to 0% fixed income.
All right. Commissioner Book?
Yeah, so my only comment would be, it really seems like, so this is new, Mr. Manager, really for us, because it hasn't come before us since many commissions ago. And the key pages are really the first 3, which tells us the scope and the investment objectives. As far as all the specifics from the attachment investment guideline, that's a lot of financial information that really would be kind of beyond us. But the scope is, the monies are really for the folks who are buried there and their families. I mean, that's how I look at the scope. So we don't take these monies and use them elsewhere. They're specific to the manner in which we
The cemetery ordinance specifies that it has
maintain
to be
the
used.
cemetery.
Yes.
Right? Even if we add services like we did last year, I think one was natural burial they're coming up with. Maybe there was a pet section, and some of our other areas. So this is more to the financial side of the house for this. So that's it for me, Mr. Chair.
All right. Madam Clerk, do we have any public comment on this item? Thank you.
All right, so this is, let me see what number. I recommend approval of 2025-892. We've reviewed the new investment policy statement, and we're referring it to the full commission.
All right, we have a motion to approve and refer the Evergreen Cemetery Trust Fund policy statement. All those in favor?
Aye.
Aye. All right, passes unanimously.
Thank you.
Thank you, Mr. Johnston. Madam Clerk?
Okay, Mr. Chair, we're on the 2025 925, update on GRU city financial transaction as of fiscal year end 2025. The Finance Committee receives a report regarding the fiscal year 2025 balances with general government and GRU as of September 30, 2025.
All right, Mr. City Attorney, I'm sorry, City Manager.
Thank you, Chair. This is our annual, I think, true-up report between GRU and the City of Gainesville Finance. And Dennis, do you want to take it away?
Sure. Good afternoon, members of the Finance Committee. Dennis Wen, Director of Financial Services, and I'm here to present the financial transactions between general government and GRU for the fiscal year 2025. To start off with the general services contribution, general government has received $7.1 million out of the budgeted $8.5 million. Now, this was deducted by the GRU authority for county streetlights of $1.1 million, and also attorney fees, legal fees through $300,000 for battle of the referendum over the past year. This did not include a true up of county streetlight expenses. This was about $146,000. So they budgeted a deduction of $1.1 million, but at the end of fiscal year 25, they came back with all of the county streetlight invoices, and which resulted in a true up of another $146,000. Under the indirect cost allocation, we did receive $2.2 million out of the budgeted $2.2 million. This is reduced from the FCAP study that we produced, but we have received everything that we were budgeted for fiscal year 2025. Under utility taxes, we have received $16.5 million out of $16.1 million. So we are a little bit over budget on utility taxes. So this was pretty good. Under stormwater and solid waste fees, we've received $22.9 million out of $19.1 million budgeted. This is about $3.8 million over what we were budgeted, but this did not include some bad debt that GRU had come back with us. They implemented a new billing system in 2024 and did not write any invoices off, and we do receive the full revenue from the billings, and at this point they have written off about $300,000 worth of solid waste and stormwater management fees from 2025.
Okay, so was this higher partially also because we mid-budget cycle, mid-year, we raised the rates? Is that also one of the reasons why this is higher?
It's possible, yes.
Okay.
Yes.
Okay. Higher than budgeted, rather.
Correct.
Thank you.
Under pension obligation bonds, we've received the $9 million that we budgeted. Last year we did adjust the contribution rate that GRU was owed towards the pension obligation bonds, and they have agreed to that new rate, and they have been paying everything ever since. So we are on track, and we will, go according to the new debt service schedule between general government and GRU with the pension obligation bonds. Under fleet management and fuel services, we've received $3.6 million. This is a little bit short of what we budgeted, but this isn't out of the ordinary. There's fluctuations in services, so these costs will be variable for what we charge GRU. In the general insurance fund, this number here, we've received $13.8 million from GRU. The majority of this is claims that are passed through to GRU, so it is quite larger than our budget, but the $2.2 million in the budget should be about 44% of operational costs that GRU reimburses us for running the general insurance fund. And then next we have city attorney direct services. This is for a staff member, two staff member of Mr. Nee's office. This arrangement sunsetted last June, So we've received 127,000 out of the budgeted 206,000 for the fiscal year 2025. But that arrangement has sunsetted, so we shouldn't expect to see this payment for service going forward. And finally, we have some miscellaneous payments. So refuse services, GPD services, unemployment taxes that GRU reimburses us for. There is a new portion here that it was a true up. So last year, in 2024, we underbilled some general insurance fund billing. So we were able to settle that with GRU. So they did provide, I think it was a little bit over $200,000 of a true up. So for transfers and charges for services that we paid to GRU, with the IT service SLA, we paid GRU 5.4 million out of the budgeted 5.9 million. This is under budget, but this is what we expected to pay, was $5.4 million for fiscal year 2025. For telephone services, we're on track, so 178,000 out of the 170 that we were budgeted. Nothing out of the ordinary there. And then finally, with stormwater management and solid waste billing services, according to the MOU that we have currently standing with GRU, we've paid them 801,000 out of the budgeted 806. There's small variations due to mathematical calculation. And then finally, we have miscellaneous services of 955,000. This is again the majority of this balance is the bad debt that we are reimbursing GRU for, and also some property insurance that GRU pays the invoice for, and then we do reimburse them for that. So for the due from balances, this ended with $1.8 million that we will owe GRU at the end of fiscal year 2025. This balance is still outstanding. As we work through our reconciliations, we will work to settle this amount, but I think it's still on the table for this amount to change, but I don't expect it to change. The majority of that balance of the $1.8 million is the final payment for IT services. So we do pay them in arrears for IT services. So after the quarter's over, we will settle that. So that's what we're waiting for now.
Mr. Wynn, is it the roughly $500,000 that was the difference between the 5.4 million and the 5.9? Is that, or is this different? I'm sorry.
This is different. So this is in aggregate what we still owe GRU.
Okay.
After we've settled our balances with GRU, we figure out exactly how much we're paying for IT services. We put that on our books, and then we put it on a schedule to pay them. And then we come to an agreement. We say, hey, this is what I have in my record. This is how much they have in their record, and then we settle that balance. So it could be miscellaneous services, but again, the majority is the IT services SLA, which did settle out at $5.4 million total.
All right, thank you.
Some non-interfund balances for utility expenses, contractual services, other miscellaneous accounts payable items. We did pay GRU $7.6 million. We are current with this amount, and we also pay GRU some dark fiber invoices as well. And these are connections between location to location for hosting our fiber wire. And then finally, we have right-of-way permit fees that are still outstanding. This is the only thing that is outstanding with GRU, as we have not come to an agreement on if they will be paying that or not. And that amounted to $132,000 as of the fiscal year 2025.
I have a question. So that right-of-way permits, is that something that we will continue to carry over into fiscal year 26, that we carry that 132?
Correct. I'll continue to carry it and account for it as long as we have the assumption that GRU will pay or does owe this amount. I'll keep it on the books until we do settle out what will be decided either in court or afterwards.
Or legislatively?
Yes.
Okay, and then so I had a question. I did have a question about the Connect Free payments. Just, do we know that, have they are we sure the Connect Free collections have stopped?
Yes.
We know that they've stopped, not merely that they've stopped being paid to us, but that they're no longer being collected or required, and then also not paid to us. All
Right.
That's the
That's-
part
as
that's
far
been
as I
missing
know,
for, that's the
they're
part
not
that's been
collecting
missing
it.
for me to understand whether it's truly been stopped collecting. Partially because I'm not out developing property, out in that service area.
Yes. As far as I know, it's not being collected, but I do know that it's not being remitted to general government.
And is there any money left there that we think should have been
Transferred over.
transferred to us, that because it was part of a Connect Free, but has never been transferred to us?
Right. I've accounted for everything since their last payment. I believe it was last year in June. They stopped those, but they did settle the very last payment. They were actually holding on to it for a little bit until we did settle out.
Okay, so we think we have received everything.
Yes.
That was properly collected in the before time. All right, in the back of my mind, I've been worrying about it. At the tail end, where, there was a decision and what money was still flowing in or had recently flowed in to that, whatever that fund is, and whether we got it. But it sounds like we did receive last year our last chunk of it. Okay.
Right. So that's it for my presentation, but I did include a backup item. This is a detail of every single transaction that we have in our interfunds, so it is quite comprehensive. It does list items by the date that we've received it and the date that we were expecting the revenue or payment for. At your own convenience, you can review the schedule, but it does detail every single transaction, other than the non-interfund transactions that I highlighted on the previous slide, which were utility payments and miscellaneous other services. Any questions?
Commissioner Book?
Thank you, Mr. Chair. So I suspect of our different financial reports today, this will be the one that probably has some general discussion at the full commission. So I'll probably hold some questions, but could you just go to the transfers and charges for service, the second slide? I'm struggling to understand just a couple things, and it's really on my end. So I understand we have positives and negatives, and they transfer money to us, and we transfer to them. The true up, if my understanding is right, Mr. Manager, from before, we're no longer doing that, essentially. GRU has said it's everything current or maybe the preceding quarter forward. We're not looking, saying 2 years ago we incurred X costs. That's a thing of the past.
That's related to the indirect cost.
Yes.
Yes, that's been, I think, the point of discussion between the city and GRU, but that is how we're approaching it going forward.
All right, so it kind of means in essence that we have to do what you've talked about, directors. We need to be accounting for everything as we move each quarter, because if it was 2-3 years ago, 2-3 fiscal years ago, that's not even considered in the figures that are going back and forth. On this particular one, just tell me the general insurance with the negative 11.6 million, what does that mean from a full budget perspective? If someone saw that and they'd want to explain, where does that show in our budget? How does that impact our budget?
It does not. So those claims that GRU pays for are just passed through. So maybe I shouldn't really even include it on our slide, as this is not something that we would budget for. GRU is responsible for all of their insurance claims, so they would have to have that budgeted on their side, and that is the majority of the $13 million. But the $2.2 million that they are paying for services for, which is the general insurance fund's operational cost, that is what they're really paying us for.
Well, it may be helpful just from a perspective to show on different governmental entities, in the city, what their claims are. So that's really a decision you make as a director there. But I think the important thing is this is not a general revenue hit that we weren't planning on. This is not even being paid by the city. This is paid by the GRU authority at this point.
Correct. Luckily, they figured they were going to settle that amount, and that was a big lawsuit that was settled.
There's always a couple of questions here, and I'll just wait because there's just the two of us. The General Commission will probably have some questions related to these two slides, I suspect.
Well, so,
Go ahead, sure.
Commissioner Book, this doesn't go to the full.
Oh, it doesn't?
No, but I can imagine that Commissioner Eastman might want to bring up individual. unless we would like to, unless this committee would like to refer it to be put on a on a discussion at a future meeting or a GPC, I'm open to that idea that if we want to, because we're kind of, I don't know. But they won't say, Eastman will probably want to talk about it, but if we put it on if we refer it, then maybe, Mr. Wynn will be in the audience with us that night.
It's a good catch. I see it as just received. But we've been having regular updates on GRU as an agenda item anyway, so I would suspect maybe this would be a backup item that can be in the general GRU, and if it generates questions, it will. So we probably don't need a separate finance item. Just, is there a placeholder on any of our upcoming GPC or CC agendas for this?
No, we were holding GRU related items related to the referendum results and everything, but I don't believe that we have any specific holds for GRU going forward.
I think that's probably sufficient at this point. When it comes up, this could be a part of the backup unless you think different.
If we schedule a general GRU update at some point.
Whenever the next general one is, this would be a backup in that item as a piece of that. What do you think?
I was going to look at the manager. What do you think about that, Mr. Manager? And I don't know if that would actually come. I imagine our next update will actually be from the city attorney.
Yes.
And that this might not fit as easily, as squarely in an update from the city attorney.
I would say that is likely the case. If you all wanted to refer this, we could put this on consent for like we do for the other reports that are on on the finance committee, which would go on Thursday's agenda under consent.
If we do that, then it provides an opportunity for someone to pull it if they want.
Okay, I think that's probably a good idea. But so you're just saying something.
Refer to the consent agenda.
Allow it to refer, and I'll make that motion there. And just in case there's a couple questions, sometimes people will look at these and have things that they may want to comment on. But I'm good. The one that I always fail to understand that I really struggle with is that we're essentially paying for county streetlight access and mobility when we had a previous contractual agreement. And it's in the county, so there's multiple reasons why I just don't understand that one, and that's not for you, Director.
And that would be my only concern about putting it on the agenda. That could be just a simple update, and then it turns into like a long discussion about the rub out agreement in detail. But certainly, if the commission wanted to or if you all wanted to refer this to the consent agenda for the 20th, that would be appropriate.
It could be that you just. Mr. Chair, that we just provide this backup in an attachment to the full commission and just say this is what was discussed. This was an item that was discussed at the Finance Committee. And so if they need any more information, that they can come to your office. What do you think about that?
That would be appropriate too. If you wanted to make the recommendation, we could attach the information as a memo and send it out to the full commission separately.
I like that idea, just because this is kind of end of the year, and we've talked about individually in this committee and the broader commission. We've talked about some of these chunks and kind of wanting to understand where we're at, SLA, transfer. We've gotten some small updates through the year. So maybe just send it, provide it to all the commissioners as this was something that it won't be on an upcoming agenda, but this is a report that we think the whole commission should see if they didn't manage to come to the backup on this agenda.
Yeah, we could definitely do that and get that out.
Okay. All right, well, so with that, as Chair, I move 2025-925. We have received the report with one additional note that the backup for this particular item will be provided to the full commission as an attachment should they have any questions for the manager's office or our finance office.
Okay, so I understand the motion is to send this, to share this with the entire commission. Yes. That's the motion, for the manager to do such. Madam Clerk, do we have any public comment on this item?
Yes, we do. We have Mr. Khalid Blunt.
Good afternoon, Mr. Blount.
Good afternoon. I can't miss an opportunity to remind you of something I brought to you in the recent past. If the courts do not go the way of the voters on this issue of GRU control, And sadly, that's possible as our court systems have become a little bit politicized. Then the commission needs to take a particular action, because what we have is a citizen-owned utility being taken, literally just taken away by another entity. And that's not how acquisitions and mergers work. So if the court decision does not go your way, you must invoice GRUA and the state government for the total value of all GRU's properties, buildings, equipment, hardware, software, uniforms. GRUA controls the labor relationship, the pensions, the payrolls, everything of funding for GRU. So when they say you still own it, that's a lie. That's just straight up a lie. You have no power to do anything with any part of it. So you need to bill them for the full value of all those things. Also, all the infrastructure in the ground and the easements that they are on, and overhead, and the easements that they are under and over. I'm guessing it's somewhere around 2.4 billion. I'm not going to take time to explain what that calculation of that number, because it was confusing to me, but somebody explained it. So if you do not get back control of GRU, then GRUA owes the city of Gainesville $2.4 billion.
Thank you, Mr. Bonner. Madam Clerk, do you have any other public comment?
Mr. Chair, that is all the comments.
All right. All those in favor of the motion?
Aye.
Aye. Passes unanimously. Madam Clerk, what's the next item?
Mr. Chair, the next item is 2025-928, sixth budget amendment to the fiscal year 2025 general government financial and operating budget, financial and operating plan budget, The Financial Committee review the proposed budget amendment resolution, and if acceptable, recommend that the City Commission adopt and propose resolution.
All right. Mr. City Manager?
Oh, I did want to use this opportunity to introduce our new budget director, Allison Teslia, who this is her second week, so she has had a first week with us and managed to come back for a second week, so it's already ahead of the curve. So I would want to use this opportunity and have her give a brief introduction to the Finance Committee.
All right, great. Ms. Teslia?
Hi, good afternoon. Nice to meet you. Allison Teslia. I am the new director for the Office of Management and Budget. I have over 15 years of experience working in governmental accounting and budgeting, and I'm happy to be here. So,
Anything in particular we should know about you? Anything fun?
I serve on the FGFOA Board of Directors, which is something that I've worked towards my whole life, and I'm a big proponent of the FGFOA and GFOA associations.
Great. Commissioner Book?
Yeah, this is just a positive. So what brought you to us?
You guys needed a budget director. So here I am. I
It was
have
a little shorter than I. It's a little shorter than I thought. I can't tell you.
Some flavor, you know.
I wasn't prepared for that question.
When somebody comes to the city in what is essentially a management role, you're in a management role. You're directing quite a bit, you're controlling quite a bit, delegating quite a bit. I was wondering, what was the hook that brought you in? It's more than just typically, look, they had a vacancy, because you're doing what you're doing elsewhere. That's really what I was trying to
Well,
get at.
talking with the executive management team and the things that they're going to need for the person in this role, I've already done those things. I've built a department from the ground up in Lake County, and I'm looking forward to setting it up fresh and, so it works the best way. That's my goal.
Thank you. That's great. I'll just say, I know you'll be building lots fresh. I really like the look of our current budget book. The past couple of years have been the consistency to be able to flip one open and one open and one open and have some consistency.
Oh, yeah.
So that the public, so commissioners, we can say, oh, this is how it develops. I think we're gonna, at least my opinion, my not so in-depth reading of the budget book, but I like being able to have that continuity to be able to quickly compare, to understand how things grow. kind of with my own eyes. So I've been very excited that the past city manager really, and with Ms. Boyd and all of the staff have been able to bring us up to I think a pretty good level. And so all I will appeal is that I really like the continuity, particularly some individual graphs. When the state government says crazy things about our budget, I can go, no. 1, 2, 3, budget year
Oh, yeah.
2025, and look at it in all in one place.
Well, that I gotta give credit to
I agree.
Cynthia.
We know who put it together.
We know, but it is something I think I'm very proud of, and so I'm sure you've had a chance to look at it.
Oh yeah, that was one of the first things I said was how beautiful your budget book is.
And it's not all just colors, and it is the
No,
material, the readability of
It's
it.
it's really easy to read, and good information is there.
Yes,
And
so-
it's at a level where somebody from the outside can understand it.
Yes. So this is really a brag on Ms. Ramos, but I do really enjoy it. So I look forward to your work with us, with this committee, but also with the whole commission. So welcome, even
Thank
on
you.
your second week. We ordered this beautiful fall weather just for you.
I'll take it. Thank you so
Yeah,
much.
that's a good comment, Mr. Chair. That budget book is terrific. I use it all the time. When people ask, it's got comparison figures, it's intuitive. And even the state group that came to kind of evaluate our stuff were pretty amazed by the comprehensive nature, but the ability to extract data out of it. So that's a good pickup there.
I should add, Ms. Ramos has already transferred the files to Ms. Tesley, which is a major, that was one thing that I think both of them connected during the interview process about how important it is to keep your files, secure. So,
Oh, yeah.
so that's a big milestone.
Yeah, keep the 900 gigabytes of data that's in there together as you move forward for next year,
I
because
feel
it
like
is
it's
helpful.
more than that.
Well, thank you for giving us a little moment on that
Thank
and
you so
introduce
much.
yourself. And now we have a budget amendment, right?
Yes. I'm trying to
Good afternoon. Susan Boyd, Senior Budget Analyst for the Office of Management and Budget. What we have here is the sixth and final amendment to the fiscal year 25 financial operating plan. So this consists primarily of our reconciliation of our departments by fund and everything for the end of the year. This is as of October 31st is when we pulled the data. So there's still ongoing adjustments and things being done by finance. But we had to have a stop date and say, okay, we got to fix it by this date. So to start with, in the general fund, what you're seeing here at the beginning is there is $1.7 million in other financing sources. This is an audit entry that is tied to a posting by accounting for the Government Accounting Standards Bureau, GASB 96 full cost allocations for software, and then there's some GASB, I think it's 97 for some leases. So you'll see that throughout the budget amendment in some of the different fund sections. So it's a revenue that's offset by the expense side of it. It's a net zero for the two. But you'll see it outlined here down below by each department, how much was each department and what software it was for. Okay. And then under the general fund on page 3, then we had some expenditures that were funded by already existing appropriations. So these were tied to our year-end reconciliations. So what we do is look at all the departments and determine, are they over budget, under budget, and how do we need to balance them out. The fire rescue department was $1.2 million over budget. So we pulled funding from the police department and public works, which had some excess fund balance in the general fund, excess budget in the general fund to cover those expenses. And those expenses are related to personnel cost. So it's kind of an across the board with them for personnel costs, not just one specific area. And this was tied to their, I believe, 2472. When we did the 2472 at the end of last year, we had to make some adjustments for the budget. And so this was kind of a true up of that throughout the course of the year. Once that's all settled in, this is kind of where we ended up with some of the numbers. So
Commissioner Book.
Yeah, thank you. Well, yeah, I actually had a question about that. So essentially, the 600,000 was probably overtime or something. Isn't it?
actually, it was not overtime. Most it's 1.2 for them, and it was across like their permanent. Got to make sure I'm looking at the right one, not the wrong. Fire rescue. So it was across to their permanent full-time, their payroll taxes, some of their benefits that they pay out.
Okay.
So it was kind of across the board. Overtime was $328,000 over budget. So they had a $2.5 million budget, and they were $328,000 over that for just overtime. The rest of it is all tied into payroll taxes, permanent full-time. There may be some adjustments with health insurance, that type of stuff. So it's kind of an across the board with salaries and benefits.
All right, well, thank you for that explanation. Thank you, Mr. Chair.
Then the next one was we had $52,000 that we pulled from, that we needed to allocate to the non-departmental, and this is to cover the city's portion of their GRU litigation expenses for the last 2 quarters of 25. $20,240 for the city clerk's office. Again, this was year-end reconciliation for personnel, so they were fully staffed 100% most of the year. So any slight adjustment in health insurance or anything like that, it's going to cause it to be over slightly.
And I think they also had a slight restructuring.
And they had a reclassification during the year.
I think at least one reclassification, so that makes sense.
Yep.
Thank you.
Then we had $1,800 in risk management, and this was like the final little piece of the additional cost for the security for City Hall for the year, to pay that out for the year. And then there was $1,096 that was Parks and Recreation. They had some funding in the summer funds program that they're moving back over to their special revenue program for sponsorships for Parks and Recreation. And then page 4, the special revenue funds. We had a lot of new revenue that came in, and you had that transfer from the general fund, and I'll just kind of go through the expense side, that way I can tie the 2 pieces together. So again, there was some allocations in here so I'm on page 5, I just kind of jumped a page. For these GASB adjustments, there was additional revenue allocated to the city attorney and the city manager in the GCRA fund. Again, this was for overages for personnel costs, so just reconciling everything at the end of the year. So we did have some adjustments in those departments in personnel, so there were some slight cost changes there. The GPD billable overtime, this was additional revenue that they received, so we budget that at $1.1 million, and then this is just reconciling the additional that they received for the billings for patrol overtime services provided. In the miscellaneous special revenue fund, there's several different small programs where we receive fines and fees and stuff like that. So there was $20,000 in the law enforcement education fund program, $5,739, which was funding for the sidewalk fee in lieu program, which was fees collected, $3,400 in cultural affairs for their cultural affairs projects, which they have. These were donations that were received. Parks and Recreation, this was the Great Invader Raider Rally program that they have, so they get donations for that throughout the year, so that's just recognizing those donations. Fire Rescue has some funding, $2,600, and the FM Global Foundations grant. This is kind of an ongoing funding that they've got. They're trying to use all of that up. And then you'll see that $1,096 for Parks and Rec, so that's that transfer in from the general fund. Page 6 is your special revenue funds for grants. We had some additional grants that came in right at the end of the year. There was $417,000. This is the funding for the International City County Management Association. So there's a senior mobility grant. So it was funding from them for $354,000, and then we have matching funds of $63,000 that the city will be covering, and those are for payroll taxes and everything. This is related to a single position that they have here. Fire Rescue received $55,000 from the Division of State Fire Marshal for hazmat sustainment grant, and then there was an additional $1,985 that was received for the Department of Agriculture fiscal year 25 mosquito control program. And then, then the next section, expenditure appropriations and adjustments. So we have been working with the Department of Financial Services to reconcile and close out a lot of our old grants that have just been sending. They've got a new grant coordinator, so she's been working through that. So what you see in this next section is grants that we have closed out during the course of the year, and this is just reconciling the budget down to where, down to zero, so we can close out those grants in the system. This is more of a cleanup of the data in the system. So I don't know if you want me to go through all of those, if you have any questions on any of those.
Commissioner Book.
Just one quick question on this particular section, page 6, was either you or maybe the manager can speak, tell a little bit about the International City County Management Senior Mobility Leaders Grant. What did that do for us?
Mr. Chair, we had applied through a new program that the ICMA has offered, which is essentially a 2-year program where ICMA funds a economic mobility manager position for a select number of local governments. I don't know how, off the top of my head, how many local governments were awarded. I want to say it's no more than 20. We were selected. And so what the grant is the grant will pay for 2 years of salary for a economic mobility manager, as well as some operating funds over that 2-year period. We're currently have been recruiting for the position. We just got applications back today. And that person will be brought on. There's some ICMA reporting and training that we'll go through. Once the person's on board, I'll make sure that they come by and we do some introductions. But it's a 2-year program that we'll be working on economic development project. It's primarily focused on economic mobility, like moving folks up the economic mobility ladder. So they'll have a focus, I think, on that. And then the operating funds goes to the part of the project that they identify in terms of what the work product will be, both for the city and for ICMA. So we're very excited to bring somebody on board and have some focus. And it's the first year that the ICMA has provided this. And it's obviously a pretty generous grant program because they'll be, funding a full-time position for a 2-year period.
Yeah, the total value of this is, upward of $400,000 with the city just spending a fraction of that, and it's economic development, economic mobility is career and training ladders, succession planning, and so to the extent that you can advertise, you're probably already doing that with the chamber and other areas, but this is a great use of monies, non-general revenue fund monies, because we aggressively pursued a grant that will benefit us. So I thought that one was of particular interest for us.
That position will be housed in my office, so they'll have kind of a broad ability to touch multiple areas of the city in their work.
So we'll start from when it's filled through what fiscal year 2027?
That's correct. Yes, I think it's. I remember when the grant period is tied to off the top of my head, but it is for a 24-month period once they're on board.
Very good. Thank you.
And so we approved that on consent, right? So we didn't have an opportunity to say,
yeah, we didn't
thank you
really,
to staff for going after something.
Yes,
that,
yes.
We didn't know you were working on
Right,
necessarily,
right.
and getting us a chunk of money for a very interesting project. So
Yes.
good job to
Yep.
all the staff that was involved in that.
Yeah.
I think we did approve it on consent.
You,
and we
you
did
did,
talk
yeah.
about it.
And the grant application was a combination of work between our office through John Alexander and Thomas Harrington, as well as GCRA staff. They worked together on the application, and we even had some outside eyes put on it to take a look and make sure our application was as strong as possible. And so we were lucky enough to get selected.
Great.
I would suspect that at the time you fill that, this is really not a finance committee thing, but when we do that, we'll talk about how did we get those funds and what's it designed to do and who the partners are. And in spite of the fact we have to cut, we've had to cut some positions in the last 3 fiscal years, this is one that is being paid essentially the vast majority of it from a national association. So thank you.
All right. That's it for me. Sorry, Ms. Boyd,
That's
we
okay.
got off track.
Not a problem. So then on page 7, the next section is the capital projects fund amendment. So this includes a bunch of new revenue and some reallocation of fund balance in our wild spaces projects. So we had an allocation of fund balance in the capital improvement revenue note fund, which was for payment of a one-time payment for the city's yield restrictions on unspent bond proceeds. Then we had a fund balance allocation. Sorry, I'm jumped to page 8 on you. I just
yeah.
keep jumping pages on you. In the facilities maintenance recurring fund, this was a fund balance allocation of $21,000. This was for some repair work that was done in the Human Resources Department over at the old library building. Then in the General Capital Projects Fund, we had some miscellaneous revenue of $39,000 and some transfers that came from the general fund for the Ironwood Capital Project Surcharge Program. And then there was $2,200 in the city manager's office funding for some IT. We did some IT upgrades. I think it was in 24, and this was kind of a small little roundup at the very beginning of the year. Then Wild Spaces, Public Places, there's some additional funding for the Hippodrome project and for their operating set-aside program to reconcile out, their overages for the fiscal year. That balanced out to $420,000. And that's in the old Wild Spaces Fund. In the new fund, the Infrastructure Surtax Fund, we have a fund balance allocation of $675,000. And this involves reduction of funding for the Thelma Bolton repair project. This is due to the City Commission's decision to demo that project, so we reduced the funding allocated to that project. Then some new funding for the Bivens Arm Nature Park boardwalk replacement. So this is replacement of boardwalks. $600,000 for the TB McPherson Recreation Complex improvements. So this is additional costs related to design services and re-roofing the building. There was $300,000 allocated for the Thomas Center A renovations for existing condition assessments and recommendations report. There's $200,000 for a new project with the Bo Diddley Plaza stage rehabilitation. And then again, $75,000 in funding for their Wild Spaces project management. This is their personnel cost, and to reconcile that for the end of the fiscal year. And then in the half-cent infrastructure surtax fund, we completed the North Main Street 39th Avenue to 53rd Avenue project. So this project is closed. So we're returning that remaining budget to fund balance to be reused.
Ms. Boyd, I have a few questions. There's a lot there.
Yeah.
Easy question, I think. First, the North Main Street, did something change, or is that just a little? We just came in a little under budget.
My guess would be I can speak to that.
Sorry, Susan. Good afternoon, Brian Singleton, Interim Chief Operating Officer. The North Main Street project was completed under budget. I think we originally budgeted $1.3 million, so that's just the delta in the actual expenditures.
Got it. Thank you so much, Mr. Singleton. And then the $1 million for the Wild Spaces Nature Park Boardwalk, Bivens Arm, is this happening kind of in conjunction with the, there's a wetland restoration or some sort of an update to the, I assume, the water flow. Is this happening at the same time? I know that's from a different pot of money.
No, it's not happening concurrently. It'll be a separate project. The boardwalks are outside of the marsh restoration area, but the boardwalks and bridges have essentially failed, so we need to get them replaced.
I'm familiar. I've been on them. They're pretty rough with a bunch of short-term replacements, patches along the way. And now, so does this fit into, where does this fit into our kind of our larger Wild Spaces plan? And this is Mr. Manager, this is kind of a larger conversation about some concern about Wild Spaces, public places, just so that, because there's lots of moving parts and some of these are big chunks, and I know we have a little more revenue than we necessarily had planned for, but then I think we're starting to see the end of the road at some point. The money ends, and so we have a very big project at 8th and Waldo, so I think there's a lot of concern on the commission, but definitely for me, of making sure we fully understand which kind of pot this is coming out of, where it fits into the larger plan, what is truly new dollars being spoken for, or something that is already in the plan. So I'm a little worried.
It's a very good preamble to our upcoming meeting.
Yes, and I think that's kind of what I was getting at. But I guess, is there any part of the upcoming meeting do we need to know a little bit about for this budget amendment?
No, I don't think we do. But it is our intent to have a more wide-reaching discussion in December related to both Wild Spaces and, of course, Morningside as well. But But that is ultimately what we're trying to get to, so the commission is sort of a better feel or a better sense of where projects are, how much they cost, with the transparency, so you can make better sort of decisions, not just today, but but to the end of the 2032 timeline.
We have scheduled meetings with each of you to discuss through that, and then December 11th will be the full discussion on how we plan to build out the work program and funding and things of that nature.
Okay. Sorry, we got a little disrupted there. Do you have, Commissioner Brooke, do you have anything at this point? No? Okay. Ms. Boyd.
Okay, so the next section is our proprietary funds amendment. So a lot of these were tied to some of the GASB entries that we had to do. Then in the stormwater management fund and the solid waste fund, we had, actually in the stormwater management fund, we had $18,496 that was allocated to the city manager's office for overages for personnel costs, and this was due to restructuring in the city manager's office. And when Brian came on, we moved some stuff around, and some of his funding for his position still gets charged to the stormwater and solid waste funds. So we had not budgeted for that, so this is to reconcile that at the end of the year. Then the RTS fund, we had some new funding that came in for some vehicle sale proceeds from auctions for sale of vehicles. And then again, in the solid waste fund, there's $9,286, again, to the Alva City Manager's Office for funding for year-end reconciliations for personnel. And then the internal services funds, we had some additional revenues that came in that we allocated to offset some of the overages and expenses. So in the Employee Health and Accident Benefits Fund, we allocated fund balance of $2.6 million for risk management, and that was for Blue Cross and Blue Shield claims paid out. Those were much higher than we had budgeted for. So we had the additional revenue came in, and we allocated fund balance to pay those. Then in Wild Spaces, this $50,000 at the bottom here was just an adjustment for the year end. Wild Spaces moved into its own department in 25, but we didn't move the funding for that vehicle from Parks and Recreation. So this was just a cleanup. There was no additional funding allocation for that. And then in the fiduciary funds, there was no additional revenue allocations. All of these expenditures were appropriations for year-end reconciliation, and basically they were all tied to personnel overages, and these came out of planned fund balance allocations that we had already set aside in these funds. So we knew we were going to need to, to balance everything out, we knew we would have some set aside for fund balance allocations, and that's where all of these came into play. So these were in the retiree health insurance fund, it was $492. General pension fund, this is $2.2 million, and this was tied to personnel overages related to retiree payouts. The financial services, city attorney, risk management, all of those were personnel overages. So we have different people in those different departments that are allocated to these funds that handle payroll and the pension funds. And so this was just reconciling all of those. As you can see, they're kind of small ones as you go down. So that's it. That's a lot.
Commissioner Book?
I just have a question. This is page 10 of 11, the Employee Health and Accident Benefits Fund. So we're basically paying out $2.7 million more in claims than we had budgeted for. I know over the years, occasionally when the claims go way up, we kind of look for trends, practices. Is the coverage appropriate that we're getting? Is there ways that we can provide preventative education to see, what's there? I don't know if that's something, I just offer that as a comment, because it's a big increase in claims. Sometimes it's merely because the insurance provider is charging more for the exact same thing, but I know that has been done periodically by the city, in at least my tenure in living in the community, and they just look when they see a big increase like that to say, is there something that we can mitigate? So maybe something to think about, Mr. Manager, for your risk management area.
Thank you. I think RTS continues to lead the way, unfortunately, with some of our insurance claims. But yes, we do have several folks whose sole job is in risk management to go to job sites and work with staff to make sure. But absolutely, it's an important part of keeping our cost down.
Good. Thank you. Okay. Now I had a question about, on page 7, capital project funds. The use of fund balance, 1.05 million. This is this a fund balance in the capital, or this is our larger fund balance? Is that where that 1.05 million is coming from?
The 1.05 is coming from multiple funds. So if you look right above that with the use of fund balance adjustments, so you've got 675 coming out of the Wild Places infrastructure, 420 coming out of the original Wild
Thank you. I was
Spaces.
like-
So that's how it all breaks down. Yes, sir.
Sometimes fund balance here is not the
Yes.
fund balance.
Yes.
It is, okay.
It's not a
Wanted to-
single fund. Yes,
Wanted to
sir.
confirm that it's out of those several different chunks.
Multiple
Perfect.
funds. Yes.
And then on, I think, the next page. So we are reducing the funding towards Thelma Bolton by 1.5 million, and that is that 1.5 million, is that the city county match portion, or is that, why am I remembering 1.5 million? Or is that the city county match, or is that, no, that was just the city. That was
Yeah,
just the city.
we put in
portion.
1.5, county match was 1.5, so it's just taking half of that, out since we're not gonna spend that much.
Okay, and then the 1 million for Bivens Arm Nature Park and the 600,000, but this doesn't represent does this represent making a decision to spend $1 million because we're not spending 1.5 on Thelma Bolton? This is the understanding where this
they're
fits in.
Yeah, they're separate,
So
separate projects.
We had already been scheduled for Bivens Arm Nature Park
Yes.
upgrade. Is it moving it just to a different year, or this is just the actual, yes, we're going to spend it?
Is the actual amount that we're gonna spend.
Okay.
Yeah.
Yeah, this is the initial funding for that project. It's a new project.
That's right, because it's on the list. It's just not as big and fun as some of our other big projects, but it's definitely needed. Okay. I think I understand that. Commissioner Brooke, do you have anything else right now? No questions, all right. Madam Clerk, do we have any public comment?
Mr. Chair, there are no comments.
Okay.
So with that, Mr. Chair, I recommend approval of 2025-928. We have obviously reviewed and accepted the report, and we will forward that to the full commission for the 6th budget amendment.
All right. Before we vote on this, I will say, I think this is something where the Wild Spaces Public Places is gonna continue to be the fully understanding, because when we start moving around and we forget what's kind of on the list that's already been planned, but it's yes, we're actually spending this is the amount, and it's just a lot moving, and sometimes I fear I or others I worry about us spending the money before we really realize we did on something, because there is some flexibility, which is great. There's a lot of flexibility there, but in the end, we have a large work program, and as we're adding or taking things away from it, that's where I worry we're going to get in a little trouble. Kind of on the outside edge, the adding a project or taking something off, as opposed to the rough plan we have for Wild Spaces Public Places. So it's just something I think, Mr. Manager, it's gonna come. It'll probably come up when this goes to the commission,
Right.
Because we'll do this. Do we do this before our conversation, or is it the same meeting?
This will be on the 20th, this week, so for the
Oh,
budget.
that's right. Yeah.
amendment.
So it may pop up. That may be a good time to preview the larger conversation coming on Wild Spaces Public Places.
Yeah, and I think in part for Wild Spaces, one of the things that I think we've discussed, and we'll discuss some more in December, is like making sure that when we come to you all with projects that we have as accurate numbers as possible, because sometimes what we've done in the past is come to you with what we think a project is going to cost, and then we scope it, and it ends up being a different number, and so then we have to come back to you, and I think that in part causes some of the confusion, because as you know, we've had to make various budget amendments over time as we scope out projects. So we have sort of we have a project list that may or may not be cost feasible until such a time that we have more accurate numbers, and I think what we'll be talking about with you is an approach that will hopefully clarify, provide more transparency, more predictability, that when you set priority on projects, that we have as accurate numbers as possible, that are as close as to actual costs as possible, so there's less confusion and less having to come back, all the time with numbers changing.
Yeah, and I'd say partially the past couple of years, in my opinion, staff and commission and public has been sort of, we approved the money, or the voters approved the money, and so it's been a little bit on the dreaming and envisioning portion, but now it's coming down to, the nuts and bolts and the dollars and cents.
Mm-hmm.
And so it's a little bit of a transition between, here are a lot of great plans, kind of theoretically, and then we're really having to make them come to fruition. I mean, Wild Spaces has been producing new stuff every single month, but some of that planning out these final dollars, as evidenced both on both sides of this infrastructure chart, talks about doing some borrowing, as evidenced by that, we really are getting down to where,
Mm-hmm.
so I don't think it's anything, I think it's perhaps natural to where we're at in the arc
Mm-hmm.
of these tax inflows, and but now, kind of the outflows.
Yeah.
And so I don't think it's anything negative towards what staff has been doing. I think it's just a slightly different time in the arc, and that's why me in particular, I'm having lots of questions about it, to make sure that that we have a full grasp on it, even though the end of it is many years away. But the spending decisions, particularly if we borrow any if we bond it, we are making the decision now about how we're ending the entire tax, at the end.
In some ways, not to make this a long discussion about this, but in some ways, the approach that we've taken with the more like public safety projects is a little bit different than how we've historically done the wild spaces side of the list. Like for those street stations projects, staff did a detailed sort of cost analysis, and so when we brought that to you a couple of years ago, those numbers, those budgets of each of those projects were basically baked. Like they were fully scoped out costs, so we could confidently say, this is how much you're going to collect for this half of the penny. This is how much your projects cost. This is how far your money goes. With respect to wild spaces, it's tended to be more, okay, here's the sort of overall, grand list. Here's like our best guess at how much of these things are going to cost. You all kind of provide priority and give direction to move forward in doing more scoping and planning. We scope and plan those things. The numbers invariably change because the first numbers you started with were just essentially estimates at the staff level. And so that's where I think you've gotten into these situations where you have projects that have different budget impacts, and you're having to juggle all these things in terms of priority. So we're hoping to clarify some of that on the with this upcoming Wild Spaces is a potential different way to do that, as to your point about where we have a lot of priorities and we have a 2032 horizon, and we just want to make sure that when you all make decisions, like it's clear, how much funding, the timeline, and we know sort of how far the money can go with the remaining work that we have left to do.
Right. Thank you. And thank you, staff, for putting up with a little bit of this. This is a longer conversation that we are in the midst of, but it's important. This is budget, so we do owe it some conversation now. And then there's going to be more probably on the 20th, and then when we have our more detailed look at it in December. So, all right, well, we have a motion, and so all those in favor? Aye. Aye. That passes unanimously. Now, Madam Clerk.
Mr. Chair, we're on to member comments.
Mr. Brooks.
I feel like I've worked incredibly hard today to do these motions. I do appreciate all the finance staff and director and stuff in making sure the books and the monies and where we do things, the revenue, funds, expenditures, and grants is not typically exciting to most people, but it's the behind the scenes of what drives everything we do. Yeah, so I very much appreciate the depth of these reports, even though it takes us quite a bit of time to review them. So thank you, Mr. Manager, and thanks for the folks that are up here, but the people who are doing it that are also not in the audience. Thank you.
All right. And I'll say, I fully expect that Commissioner Engel will take over some of the motioning, so you can do some seconding at our next meeting. I do want to thank all the staff for all the different pieces, all the staff that was here today and has already left. Thank you. And thank you for letting us talk a little bit about wild spaces, public places, because it is a big piece of this, and particularly on the budgeting section, a lot of what we do is the moving around from project to project, year to year, more revenue than we thought. So it really is and then wild spaces is obviously doing like the actual park planning, but to a large degree, and what we're going to be going forward, it's a budgetary thing, kind of, not just dreaming and envisioning our parks. So thank you for being part of the process, Ms. Boyd. Yeah, so I think that is all we have. So we will stand adjourned until our next meeting. I don't think that's listed here, but it'll be in the spring, I assume, unless there's some desperate need for some other budgeting issue. It'll be.
Is it already on the calendar? You know, do you already have that?
Maybe. Ms. Ramos?
Cynthia Ramos, Executive Chief of Staff. We're working to finalize the schedule, probably around February. And we'll convene again if that works for you all.
All right. It'll be in the spring then. All right. Well, with that, we stand adjourned. Thank you.